I think it's a really interesting question because what commonly happens is people use these terms interchangeably, but they're actually quite different. So there's fintechs, there's challenger banks, there's traditional challenger banks versus new challenger banks, and each of these means something a bit different. So there's neobanks, which are basically you have banks without a banking license, but they're just building the user interface on top of something like Ycard or Bancorp. And then you have traditional challenger banks, which are people like Metro Bank, who are new to the whole area, but basically have a traditional business banking model. And then you have new challenger banks like Starling and Monzo, Tandem, Atom. And what they're doing is they're building a banking platform from the ground up. They're getting the banking license, as well as doing the new user experience on top with a new business model. So I think there's been an explosion in different areas because you see different needs. And a whole other area that's opening up is called infrastructure banking, where they're literally just building the platform for others to build banks on top of. So they have the banking license, but they're not looking to be a bank. They just want to help others to build banks. So banking platforms. And what it's really around is that you've seen disruption in almost every industry, but financial services. But now it's opening up because of APIs, new technologies that you can use, like you can now use cloud hosting for the first time in banking, and that's just available as of November of last year. So as the regulator moves to a new space where they're allowing for competition, new technology to really be used in banking for the first time, you're seeing a lot of different people popping up wanting to meet this need. So I think it really depends on the type of product you're building, the type of company you're building. So if you're building something that's consumer-centric versus business-centric, that's going to be different. Your processes will be different. But ultimately what you're trying to do is you're trying to understand the user journey for your particular product and the unique problems that customers have when using it currently, and then figure out how to differentiate within that. So then you're going to want to spend a period of your time really understanding those problems and figuring out how you'll solve them uniquely well, and then break that down into what you're going to prioritize. And once you clearly understand the problem, clearly understand how to solve it, then you can figure out the priorities that you need to work on, and you need to figure out the date at which you need to execute that by. Because for some, especially within financial industries, you often have dates that will affect your product roadmap. Like I used to work on payroll, and the fact is people don't usually switch payroll products mid-year. So if you launch a new payroll product mid-year, it's basically going to fall flat. So we had to launch specifically before 6th April. So within the financial product, you need to understand what you're doing, what the priorities are, and then what are the external events and guidelines and things from the regulator that are going to affect your timeline, and work back from that. So when you're working on new product development within a bank, you're going to have to build your requirements such that they ladder up to what the regulator has put in place, and then work on testing those out with the regulator and actually proving that they're sufficient. So an example of that is within Starling Bank. When you first receive your banking license, you actually operate under restrictions for the first 6 months. So what that means is that you can actually have a maximum of £50,000 in deposits, and you can't exceed that until you've fully tested out all of your different systems that they've put in place to say that they need to measure these and go through PIN testing before you can release. So what we do is we've gone through with the regulator and proved out these different systems, and then once you prove that out, they lift restrictions. And then at that point, then you can do a beta. So your product roadmap really needs to consider in the timeline that the government and regulation institutions and other authorities will place upon your product, and make sure you factor in those different timelines as well as the traditional product roadmap. So it's a good question because I used to work in, or not work in, but I did research at university in cognitive science. And significant data in research in a field like cognitive science requires that you get a lot of data points before you can actually have any statistical significance. But when I started Intuit, what I found is that the goal number is 8. So when you're doing user testing really early on, really what you want to do is have some really in-depth sessions with just a few people. And the common number that you really need is 8 to get like a good idea and good feedback. And so that's really for understanding the user journey, and then being able to plan your design and development from there. However, later on, once you have launched and once you have a lot of users, then you really get into optimizing. That's where A/B testing comes in, and that's where you need a lot more users to be able to get the kind of feedback that you're looking for. This probably differs from industry to industry, but given that I'm working with a tech company, even though it's a bank, it's really quite similar. We both work in lean processes and agile. The teams really, I think, here are focused on, since we're smaller, we're very cohesive and collaborative, and that's something you kind of see across a lot of different startups, no matter if you're here in San Francisco. So I wouldn't say that there's a ton of difference in terms of process, but just a bit of a difference depending on the stage of the life cycle that you're in. So I would say there's been a continuous theme. So when I was at university, some of the advice I was given is that if you try to do too many things and get involved in too many different clubs and activities and classes, basically you're going to exhaust yourself and you're going to reach a threshold to where your work quality will actually just go down because you're a finite person, you can only do so much. So figure out what your priorities are and only do those without getting too exhausted, or at least have a really strong plan for how you're going to build in time to recoup in between all of these different things that you're trying to manage and do. When I started Intuit, we had a lot of brown bag sessions and sessions with leaders, and I found it interesting that that same feedback came back. But the way that it's usually phrased within business is don't be afraid to say no. Because oftentimes, especially when you're early careers, people will ask you to do pretty much everything. And if you accept all of it, then all of a sudden you're going to be trying to do everything for everyone, and something's going to get dropped in there. So you have to be able to figure out not only how to prioritize as a product manager, but when to say no and how to do that in an effective way. So the main reading material I'd recommend is called The Hard Thing About Hard Things by Ben Horowitz. He's a venture capitalist in Silicon Valley, but he worked with Mark Andreessen at Netscape back when it was being started. And then he did another company called LoudCloud, which turned into Opsware. And he really talks a lot about the different challenges he faced and the struggles he faced when building a product and a company from the ground up, and how to evolve that as technology was changing as they were building their company. And it's a really interesting success story because they ultimately ended up selling it for $1.6 billion, which sounds great, but it took a lot of hard work and a lot of really strategic thought around how do you build teams and shift teams and change strategy to evolve to evolving market needs. And so it's a really good book that's relevant for anyone who's especially within like a tech startup. So that's the one that I usually recommend. So I would pick Google Drive, Jira, and Slack. The first being because Google Drive is really easy to collaborate on, and you don't need Microsoft Office. You can just use Google Docs, Excel, and it's easy to share and collaborate on different documents together. And email is obviously going to be an essential need. I know Slack hopes to replace it, but Slack is a great tool additionally, but it's more of a team collaboration tool, and it's where everyone can have insight into the same communications channels. It's also just a really well thought through product. That's been well designed and created. And then Jira, because that's key to any product development and management process, so you can really coordinate across work and across teams and launches and releases really well. And there's some other tools out there. Asana is a great one, and that can be free for teams up to 10. But I really like Jira and the sophistication built into it, so I would just start with that and get teams used to using Jira from the beginning. So as the market changes and technology changes, what you really need to do is to evaluate your product and how you can actually disrupt your own products and services to keep pace with change. So what we saw back with the move to digital is that a lot of companies were afraid to move to online, and that's because it changed their existing business model, and that would disrupt their current revenue stream. So what you really need to do is to be willing to understand how is this technology and innovation changing the product that you're offering, and not be afraid to disrupt that and disrupt your current revenue streams by building out a product that actually challenges that. And so what we've seen is companies like Blockbuster who didn't necessarily see the change coming with digital, and that would change the revenue streams in their current business model, and they had all of these branch locations, so they were afraid to move into it. But now what you see is, when you see a Blockbuster, usually it's an empty store, because Netflix was able to come in and really see this change and how you could evolve that business model to the new market needs, and those are the ones who end up winning. Because now it's not really the big who eat the small, but the fast who eat the slow, essentially. So what you really need to do is not be afraid to disrupt your own product. So even if you know that that's going to nip away at your own revenue, ultimately that's the long-term game, and that's what you need to be willing to do in order to be successful and competitive and to remain in the market.